there's always something lurking around the corner that can happen. Okay, so for me yesterday, I was really in flow with the market, reading it well, took a couple losses here and there, but made some good trades. But you know what rattled me was when the data feed started to get chunky and slow and choppy, because I was in a couple positions when that happened, and surprise, surprise, I wasn't using strategy order. So I didn't put in a stop order. So what happened was all of a sudden I'm in a position, and then my platform starts sort of freezing up, or the data gets slow, and boom, there's my lurking, you know, thing that rattles me in my emotions and my trading. So I had two or three super good entries, at both extremes, at the lows and at the highs, where I couldn't stick with it. As soon as my data caught up, I put my stop in there, break even kind of thing. And then what happens? Of course, I get stopped out, and then I'm trying to use like a little pause when I get stopped out, um, so that I'm not over trading, and then there it goes. The market just goes ripping one way or the other in my direction, and I'm like, dang it, why couldn't I have just waited a little bit? And so I guess, like, I'm just reading here. We're just now up on the stream, I think, on YouTube and stuff as well. So, welcome to everyone. I probably should have said that first. Welcome to everyone. I'm filling in for Niels today, the inventor and guru of Trader Platform. That's the platform I do like to use. And it was not his platform issue. It was the data, because I logged out of his and moved over to Rhythmic just to make sure it was going, it wasn't something that I was doing. And it was just the speed of the markets, right? And so, but anyway, let me just, backtrack a little bit. My name's Bozier Parsons. I'm here to help educate, mentor, answer any questions. Housing market looked like it was sort of ready to turn, and I thought it was a good time to get out and try trading again full time. Let's see, I'm getting a post here from Terry that I'm not in the pit. Let's see, I think others are seeing me in the pit, Terry. So maybe check your media tray in the upper corner, and then just make sure, if you're in both rooms, just make sure to mute me in one room versus the other, so you're not getting an echo. But so anyway, I've been trading. I started in 2007, late 2007. I traded stocks for a while with my dad. My dad was a pit trader in the OEX on the SIBO in Chicago. So he put four of us through college and all that by trading as a local in the pits. So he kind of helped mentor me, and that's partly why I'm here, to try to help and educate or mentor others, in a community type way. And for, if you join my room or whatever, I try not to really charge much. I mean, I do charge a little, but I want things to be accessible, like not everyone was fortunate enough to have a mentor like I was with my dad. So, but anyway, when I got back involved to full-time trading, I started just sort of hammering Danny a little bit about like, hey, if there's anything you ever need help with, I'm glad to help. You guys have always been great and you've been a great community, and I've really appreciated everything you've done for me personally. Because I was really kind of going back and forth. Hey, do I quit my job? Do I not? All of that kind of thing. So that's how I got involved um, with the pit and pit bull traders. And I'm not an owner or anything in pit bull traders. I do have an affiliate code and stuff, but so I trade some of their accounts if I'm doing some prop firm trading. Right now, I'm trading my own account, and then sometimes I switch over to a prop firm account. Like if I feel like I'm getting, I don't know, out of control, or I need to just relax a little, slow down, and I tend to kind of go on these, on these streaks where I'm in flow with the market and I'm trading well and I'm following my rules. And then, like I say, something's always lingering. So as a trader, just, I don't know how to be able to emphasize this enough, but if you feel off or if you find yourself doing things you shouldn't, there's absolutely nothing wrong with that. We all make mistakes. We all have those moments. You have to really, really try to refocus and reset. And you really have to try to pay attention to what that might be that's lingering around the corner that can derail you and take you off your game, because the markets don't care, and they're out to take your money, right? Like um I don't like to think of it in terms of I'm competing against you guys. What I like to think of it as is I'm competing against the algos. And um, believe me, the algos have taken plenty of my money. So when I have the chance to take some back, I'm absolutely glad to do it. But anyway, let's talk the markets a little bit. My trading style is such that I don't tend to jump into trades right away first thing in the morning. When I do that, it often means I take a loss, and oftentimes that rattles me and gets me emotional. So I've learned over the years that it's a little better to try to stand aside, let things trade for, at least 15 minutes, but more like 30 minutes or even an hour before I do anything. Occasionally I have a real good idea of what I want to do off the open. But given the wild action we've had and the overnight pricing here, are we gonna be gapping up here and then they just sell it hard right off the open again? I'm not sure. Right? Because the whole thing with the Fed was very interesting and still continues to be very interesting. The market rallies when they hear there's not going to be a hike, but the sell-off and Warsh's press conference was not inspiring. And what nobody seems to be asking, and I'm going to pose it, is what are these guys worried about, right? Everything's so great. The economy is raging. Now's the chance to hike and not have it be a problem, right? So my question for the Fed would have been, if I were a reporter, are you worried about a recession? Is that why you're not hiking? Because there's something that's telling you that we're on the verge of a recession, and therefore you might actually need to cut down the road, right? I think the Fed is in a total pickle here, and this thing could go either way. And, my biggest concern is that things aren't as rosy as the Fed and these economists like to say they are. I mean, the numbers have been decent, not great, but pretty good. But on the other hand, you look at like the housing industry, I don't know where I am, it's completely dead. Nothing's moving. There's no construction going on. It's a bad situation. And everyone I talk to confirms that. So I'm in Colorado. We can be an overbuilt market for sure, relative to others, and housing can be super regional. I get that. But I'm worried here. These effects take some time to get into the system. So we could go into a stagflationary environment, which I believe we may already be in, and we could easily turn and go into a recession. And if the Fed doesn't hike at this meeting and they need to start thinking about cutting at the next meeting, I mean, they'll then Warsh will look like a hero, right? But I'm just why did they not hike yesterday? It seems like a no-brainer. And I think that's what the press conference was relaying. Like the reporters were on the money by by really asking him those hard questions. And I didn't like his answers. If we're gonna, there's nothing wrong with letting the market price where the interest rates should be. I'm a big fan of that. But if we're going to do that, what do we need the Fed for? Stop all this nonsense. Or they can do their stuff with the balance sheet or whatever. I don't know. But it was a pretty, I was kind of shocked that he took that kind of tone without, without, I guess, a little more, I don't know. It's just all this stuff seemed very, very murky to me. And so what happens? The markets do not like uncertainty. So what do? They sell it off. Okay, that's kind of enough of my rant. Getting into some of the level sheets that I post. The biggest thing I wanted to look at real quick, and then we'll get to the charts and the opening. And if these openings are like other openings, they'll open it and they'll sell it right off, right? And close the gap. But I did want to show you guys, I was pointing this out in the room the other day, from our all-time high to yesterday's low, the NQ was down 12.2% at the low. The ES was down, well, I didn't quite update this one, but it only got 30 points lower than this number here. So it was down about 4% from the all-time high to the low, right? So the question is, are we just too overdone here? And especially that spread, because NQ and the techs can start rallying, and maybe there's a reason that the ES is held up as well as it has, and that spread could start coming in. So it'll be a very curious thing to watch here as we unfold the next few weeks. Obviously the buyers have come in the overnight, but you know how that goes. It's a thinner volume, so they can kind of push things around without, it meaning a whole lot. Now it could mean a lot, right? It could just be one of these days where they reverse this, and we go straight back up, because again, we've been down a lot. So that, at this inflection point here, the NQ, not only was it that correction amount that I said, but it's also like very close to its 50% retrace of that April, the move off of the March lows. So, it's like, oh, are we going to completely reverse that April and May move? Or, is this just another perfect buying opportunity? And I think something like Meta tells you how you can easily reverse that whole move, and if the consumer isn't in as good a shape as everyone thinks, I mean, I don't know. I'm really not an economist. I love kind of talking about the macro and all that stuff. But I keep kind of referring back to what my dad was talking about with me a year ago, starting, I think, where he started saying, like, we could get into this mode where the Fed doesn't really know how to handle this situation. And we can have this cycle where we're in a massive range. And every time the Fed needs to hike, the market sells off. And every time they start thinking they need to cut, then it rallies. And so I'm kind of looking at this and thinking back to what my dad has said. And I'm like, what if we've just put in this big range for a while and we have a high of 7,600 or so and a low of the range at, 6,000, call it, or something like that. I mean, nobody wants to talk about us going back down there. But it could happen. And all this, all this spend on AI and stuff, it just could need another year or two before these companies start really figuring it out. So, the other thing I thought that was pretty interesting were some of the words that Jeffrey Gunlack was saying, regarding like private credit. And he had his criticism of the Fed and stuff too, but I thought that his words were something to be wary of. And I kind of, in my own mind, I doubt that this correction is over, right? So I'm staying with what I have as my filters. If you look at my sheets, I use the slope of these moving averages and I focus on the 13-day as my primary. But when the 5-day moving average and 13-day moving average, I use a 13 period on them. When they're sloping downwards, I have a short only filter. So for NQ, we've been on a short only filter for like the last 8 days or something. I've been highlighting in the room. It's like, doesn't necessarily mean you can't take a long trade, but maybe bias a heavier position, a larger position to the short side. I mean, again, you could be near at the end of this pullback, but if it continues, it could continue for a ways. And so I'm just going to stay with my filters. On the ES, I have the same thing, but it just finally turned to a short only bias like 3 days ago. But yesterday, I believe it was the first day that we saw the 50-day moving average actually start to roll and sloped to the downside. So that's an interesting development on the ES sheet there. So we'll get to the charts here now finally and see what we can figure out, what we can glean. A reminder, I trade very short-term time frames. So I use the 1-minute chart as my primary entry. Occasionally I'll use an entry off the 15-minute, and then my 15-minute chart is my higher time frame. So I've got the ES here and the NQ, and then on the 15-minute charts, I've got crude, ES, NQ, and then I watch YM and RTY. And as a reminder, I'll pull this up so it's bigger. What I like to do is use this this yellow box that I have drawn. Sorry, this is not going great, but The yellow box represents the 5-day ATR for the instrument. And what I do normally is I center that on the Globex session close. Pardon me. And then it helps me understand that if we've already moved a lot or something like that, I can pull this up. So we could, in theory, we could say, look, that was overdone. That was our buying point. The overnight low was the low of the day. How far will it move? Well, look at this. It's not magic, right? Look at the RTY, how it perfectly just fulfilled its ATR for the day. So what does that mean? It just means to be wary of the fact that we expended a lot of energy yesterday. Now we've expended a decent amount of energy going from the low to this high here. Is this a spot where you really want to be getting long? Like, I mean, maybe it could still be that the market ignores all this overnight and instead puts in a low of the day right here somewhere in the first 15 minutes and then shoots way back up and takes out all these levels up here, right? That's a possibility, right? So I use the ATR box to kind of visually help me understand some of the action and what we've already seen or not seen or could see or whatever. Okay, this orange line is our RTH open on the session. So I'll update those as we go. In Russell, it was 29.40.10. So that's RTY. YM. We'll just treat it the same way. I'm going to drag this up for now. Let's see what it looks like based on, where was the open? 4 o'clock right there. So based on the overnight low, YM has only moved about half its ATR. See that? So we'll update. The open there was 52.103. Quick glance across the board. Other things that I watch all the time. So I've got our advanced declines. We opened positive around 360 or so. Quickly printed a little higher and now I've gone back to basically flat on the day. We're printing around 100 or so. Bonds are bid this morning, and nice bid in Microsoft after its earnings. Otherwise, some red in the Mag 7, but some green across the board on some of these other tech names. So that's generally what has been moving the market, other than a excuse me, wild Fed day. Okay, so here's our NQ chart. We've got a current 5-day ATR of now $760 or so after the move yesterday. So I'm gonna do the same thing. I'll assume our low of the day was in. It's always interesting when you see a candle like this where it opens and it just never even prints a lower price. So our RTH open was 27,877 and a quarter. Okay. Here's another thing you can use with the level sheets if you like them. So I've got this mapped out as from June 16th high down to yesterday's low. and it gives you some retracement, Fibonacci retracement levels and extension levels. And then this is going back. I just updated this one. I had it set on the April 2025 tariff tantrum low, but I moved it up to this March 31st low. So this is the move we had up from the March 31st low to the all-time highs. We moved 35% higher, right? And now all we've done is retraced about, almost 50% of that move, which ended up being, again, a correction from that level. It's a correction of about 12%. So anyway, this is pretty good. I mean, this is what you would expect to see if the Fed is on pause. Again, that selling was pretty heavy yesterday. I mean, we did sell off on heavy volume. It was almost 2 million contracts that traded in the ES. And just as a reminder, when that kind of contract or when that kind of volume and stuff comes at the end of a move that's already pretty extended, like Danny likes to say, you don't want to be shorting into the hole of that thing, right? So I could easily be missing out on a great upside move here, but what I'd rather do is see if they can sustain this, and if and when it starts rolling over, look for a short. That's how I'm aligned currently. I am flat, by the way, and I'll get to the platform and all that here momentarily as well. But so ES, our 5-day ATR, has grown to 111 points or so. I mean, I use it as a very precise number. So I have it put in as 111 and a half. So here, if we just raise that box, assume the overnight low is the low of the day, our RTH open comes in at 74.14 and a half. Right there. So you can see if we fulfill the ATR, we get back to 43 or so, then you can pop over to your sheet and look at different levels to see, where we came from, where we opened relative, right? So we're opening relative to the Globex open, we're opening 100 points higher, so it's, or is that right? Yeah. Not 80 points higher or whatever it is, right? But what I do is I glance over here and I try to see what's up in this zone here that could be resistance. You got a 5-day ATR, 5-day moving average at 74.31. And what I've started doing also is I put this box down here in the corner that shows the projected moving average based on the current slope. So you can see we have now, a projection depends on where price goes today, right? Like, so that'll change. If we go just totally face ripper straight up all day, then this 5-day moving average could quickly turn back up to the upside because it moves at a quicker pace, right? But look at where the 13-day moving average comes in at 75.03 3/4, which is in perfect alignment with the 50-day moving average, and just above yesterday's high. So, I mean, that would be a really fun, interesting reversal day. 2-bar reversal pattern could be the start of the next kind of bull leg, right? And you can use some of these things like the projected moving average. So like the 13-day, it really could come in more around 74.81. And then you can use these other numbers. You know, we've got a weekly S1 level here at 73.82 and 3/4. The pivot level at 73.86 and 3/4, right? So you can get a sense for where some of that is. You can see how some of that area was kind of the resistance that now we've overtaken. And the reason I use my sheets, or the reason I even do my sheets, is because I don't like my charts to have all these lines all through them and everything. I kind of just like to try to keep it simple to my few different concepts and then kind of go from there. So we'll wrap this up with the crude contract. In terms of the ATR, it again has continued to grow. Now look at this, is currently centered on the overnight Globex close. The 7 a.m. Mountain Time NYMEX open had it at 84.47. So I'll just adjust that down slightly. Okay. What do these markets like to do? They like to fill these gaps, right? We came back up and filled this gap nicely. Or let's see. We came down and filled obviously the huge gap. This was the one I was talking about that we came back up and filled nicely on our push through to 93.5. Now we're in this curious kind of no man's land, right? Where we have a big ATR now on crude. It's gone back up to $6.42 for a 5-day ATR. We have a big gap down here to fill, and we have a bigger gap up here to fill. And so if you just postulate on some of that again, you can do this just in your head with a quick calculation, but I like to use it as a visual so that I am helped, you know, to not necessarily be, you know, you could get short right here, right? Like if your theory is we're going to go down and fill this gap, everything's okay again because the Fed is still on pause. You know, maybe the war will end tomorrow, you know, all these things. You could be getting short right in here, you know, if you wanted to, thinking it might not go back above the open. And then if it expands back to the downside, you know, if the high of the day is in on the overnight, it comes back down to the bottom of this box and then, you know, basically fills that gap right there from a couple days ago. You know, if you're looking at it the other way, you can move the box back up. I'll just leave it there for now. I was thinking you'd probably get another shot at that 78 level. Even though I'm bullish oil, and I really do want it to go higher. Yeah, I think, you know, I think we may have found kind of the new range for crude for a while, and unless the war continues for a lot longer, you know, maybe we'll actually get back up to and above the 100 level, and maybe that could be the new range for a while. Just as a reminder, like they were talking about the 30-year bond yield being its highest yesterday since 2007. Well, as a reminder, crude oil traded above $100. It was like 115 or so for a couple of years back in that. I have to double check the charts, but somewhere back in that time frame, it traded up above that level for a sustained period. I think the high was around 147. So it's possible that that's going to happen again. I mean, I know nobody wants it high like that, but those are the kinds of things that the Fed is going to have to face, and they'll be facing the music pretty hard if crude keeps going up like that, and these bond markets, keep, if the interest rates keep going higher, it's going to be even worse if they have to hike, into a much more obvious recession. That'll be a really bad scenario, and it would lead to a very ugly correction, in my opinion. But that doesn't mean we can't go a lot higher first. So that's why everyone, that's partly why we're seeing so much volatility this summer. And that's partly why you see, I think, just so much overall expansion in volatility, over this stuff, is that there's just a lot of unknowns. It's a really, really interesting time and a really, really interesting trade all the way around, in my opinion. And the beauty of that for us as traders, is that there's just lots and lots of opportunity. So, that's just another reminder to myself, really, is like, it's okay to miss a trade. It's okay to have a stop, take your stop. The best way to handle your emotions is to predefine your risk, put your stop in, wait for the market to come to you in your order entry on your terms, and then let the trade play out. For me, it's so simple, right? It's simple to say, but when you do it, it seems easy, and it seems like, you'll have your losers, but the profitable trades take care of themselves, and the money will come into your account. But if you don't do those things, every time, that's when you get emotional, because it's like, why would you not? A lot of what I do goes right back to Mark Douglas, Trading in the Zone. One of the very best books you can read on trading and trading discipline and trading psychology. And it's, why would you not have a stop in the market if, unless you think that you know exactly what's going to happen next, right? It's like, it's okay to postulate on what's going to happen next, but you really don't know. You have to accept that. And if you don't have a stop in the market, essentially what you're saying is, I know exactly what's going to happen next. I don't need to put a stop in the market because I don't need to protect myself. Bullshit. You do. Right. And I'm talking to myself here. Right. And I say it as a way to talk to everyone else. So some of the things I always struggle with is, do I use a tight stop? Do I use a wide stop? Do I use do I tighten my stops? Where do I tighten my stop? And typically what happens is the algos are essentially using the stops as their spread, if you will, right? Like, the algos are kind of like the pit traders from back in the day. I don't know if the pit bull is actually in here or not listening, but he might be able to confirm how some of this goes. But the algos are bouncing around back and forth between your stop and your entry order. That's what they do. They probably pay for the order flow to be able to read strategy orders, and they take you out on one side and they take you out on the other. And you can see it, and you can see it when it happens to me, and I get emotional in these choppy conditions, and I start giving money away. That's what they live for, right? Because back in the day, when my dad was a market maker in the pit, that's what they were doing. They were bouncing around the liquidity, and they were trading the spread, you know? And when he first started trading, it was like an eighth. Then it went to a 16th. Then it went to pennies, you know? So the spread has, for a long time, the spread sort of got narrower. You know, we no longer have specialists and stuff that they would trade with and against. And well, now we're getting to a point where these things go crazy. Like, I don't know how to really trade NQ that well, because it moves so much and so fast, and it even though it trades a lot of volume relative to a lot of other instruments, it still trades like it's super thin, and that's partly because of the face value of the contract, right? Because it's 28,000. You know, it's sort of like trying to trade Bitcoin. Bitcoin, there's not enough volume in. You know, if you're going to trade something that you want that kind of thin price action with some volume, you have to trade the NQ, in my opinion. And that's why I look at and watch and trade typically the ES and then occasionally NQ and CL, is because they typically trade a heavier volume. Obviously ES the most, but anyway, enough of kind of my rants. We can get to sort of looking at where we want to go and what we want to do next here. You can see on the NQ, we've broken up through the upside of that 5-day ATR fulfillment box, right? So I'll pull that up again. We've taken out yesterday's high, except for the overnight high. So it's a big move we've already made. We're only 30 minutes in. We can look at some levels up here and see what comes next. You've got an R2 at 523, weekly pivot 628. Where are we trading right now? 155. So we've got prior week's low of 212. So that could act as resistance. But even just from this correction, a 236 retracement, we're already through. So if we go to the next level, a 382 retracement, that gets us back to 28,643. You know, so that starts to look like it just wants to pull upwards back towards maybe at least the 13-day moving average, if not the 50-day moving average, you know, which is higher. So right now, for me and my trading structure, what I do is I align myself. Yes, I have my sort of broader filters if I want to do short only, which I was kind of lining out. But what that means for me is if I don't want to take a long trade, then I have to wait. Like, it's, you know, I might occasionally try to just fade and put on a small position up here somewhere just as a test, like see how perfect right now the ATR is getting fulfilled in the ES. Well, a lot of times it actually has trouble getting through that. So we'll see. I think probably we just kind of keep following the NQ here. But what I'm getting at is I don't want to fade this and then get stuck and add to my losing position and all that. If I want to try and get a short, I want to see price reject from a level, come back down through some other levels, which what you want it to tell you is something obvious that the high could be in, something that really shakes the bull traders, the long traders tree and makes them think, uh-oh, I better get out of this trade. You want them to feel like they missed the high and that they need to sell the next retracement, because that's the kind of action that I look for. So usually if I'm short, I want to be below the RTH open, and I want these moving averages to be sloping to the downside. So the structure we have right now this morning is you have this potential that all these traders got loaded up short yesterday, assuming that the price was going to follow through, and now they're having to cover. And so we're above the RTH open. We have a upsloping moving average on the 1 minute and then upsloping moving average on the 15-minute. You want to, for me and my system, I should be looking to trade from the long side. Now, do I want to do that based on risk reward or whatever? And the question is, not really. I don't want to. Right. So I'm going to kind of sit tight here. And like I said, I might totally miss great long side opportunities here. But, the whole other scenario is, again, why did the Fed not hike? What are they waiting for? What are they scared of? Right? So if there's something happening below the surface, these rallies have been getting sold. You can't really, you can talk yourself into the bull market from the last 15 years or whatever you want to say. But, these corrections happen. Sometimes they become bear markets. Sometimes they become recessions. Oh my God, don't say that word. Anyway, that's my take on it. These rallies could still be just a gift for people to get out that were stuck long. There's a lot of people that bought all of these highs as they were making highs, and they just kept holding and holding. Now they're waiting for things to come back. And, so sometimes you get massive short covering rallies. And if and when they fail, they can be just as nasty, like you saw yesterday afternoon, right? And part of that is because everyone's stuck on the wrong side. Everyone got way too overloaded long, and then the shorts got squeezed out, and then there's no one left to buy. So once it starts moving the other way, the algos get a hold of the real-time positioning. They know where all the stops are, where they can squeeze it to, and if they can manipulate the market to those points, that's how they make their living. Okay, so I'm gonna get my platform opened up. What I'm looking for here on this 1 minute chart on the ES, we put in a little red candle formation. We're trying to hold this level now as support. But what I want to see, looking for a short entry, is I want to see price come down through this to, kind of make people wonder. And then I want to see the 1 minute chart roll over. I want this moving average to start rolling over and then short into a rally back up to the moving average. And then you have to just put your stop where you want it above the highs, whether it's tight or you give it some room, you know, however you like to trade in terms of your risk management and whether or not your setup. I mean, the real thing is, like, probably the way I should trade more is to use a wider stop for just news events where you rarely get stopped out on that. And the reason you rarely get stopped out is because if you see your trade not really working the way you want it, you just take your loss anyway. So instead of taking a big stop, you just say, look, the signal failed, it didn't pan out the way I thought. I'm getting out at a 3-point loss or break even or something just because it doesn't look right, doesn't feel right. I mean, it's okay to do that. I'm kind of more of a part of the thing I enjoy about trading is analyzing this stuff. And, it's like, I don't want to be a robot. Like, on one hand, yes, I would love to, like, because Danny was asking me yesterday, hey, have you ever automated your strategy? Because yesterday was a day where, man, I had so many great signals and I mean, a lot of them worked super, super well, exactly how I like for them to work. And he said, yeah, do you have that? Have you ever automated this? Yeah, I automated it a long time ago, and it worked for a while. And then I changed platforms and I couldn't ever figure it out again. It kept having all these bugs. So I kind of left it alone. But the point I'm making is I don't want to be a robot. I'm not just, I enjoy this. I enjoy watching, looking, analyzing. That's part of the challenge for me. It's part of the enjoyment I get out of it. And so that's partly what I try to do when I'm doing my presentations or my stuff in my own room is I'm just talking the action. It's like I'm sort of like, I guess I feel like I'm a little like a sports announcer, like a play-by-play, I'm trying to watch the board. I watch the bond markets, the 2s, 10s, and 30s. I watch the ticks, watch the advanced declines, the Mag 7, and the S&P 500 big board. And then, occasionally I'll pull up single stock charts and kind of flash through. But part of what I like to do is try to identify, I have my theory here, which looks like it's starting to do what I'm hoping, right? So we're getting this selling pressure now off this level. And, you should, in theory, this should be a reversal signal. So if price comes back up to this moving average up here, I'm going to look to be shorting somewhere in that 36.5 level. And then I have to figure out, well, how much risk do I want to put on that trade? So let's see, and look at this. I mean, again, this is not a coincidence, guys. This stuff works a lot. And occasionally the ATR gets blown out and you'll have like a 2x or 3x day on the ATR like you kind of had yesterday. But this is not a coincidence that you get the buying coming up in here and that they start taking some profits at the other end of that box, because it's an extreme, I mean, if you don't think it is, I don't know, let's just see how this plays out, right? Because if this thing sweeps back down and gets back below the open, how many people are going to be, are there stops down and through these levels? There easily could be. Now, I mean, it looks like you should just, that this is an area that's going to hold, right? If you're just quick glance, but that doesn't mean that's how it's going to go. Look at the rejection over here in the YM and the RTY. Again, RTY fulfilled its box. YM could only get to the halfway point, but look at how they're both now rejecting the opening print in the RTH. And, this isn't a great bar that we're seeing here in the Russell. I mean, it could hold. This is pretty good support, maybe. We're getting our rally back, so I'm gonna open my platform up here and try to get something on. I might have sort of missed it, but it looks to me like it comes in at 36 and a quarter. And you can double check your sheets to see, okay, again, we have this 5-day moving average at 74.31 and a quarter. And so can that level hold? It sort of held, or it's trying to hold. I think below that, maybe it's a problem. So I'm going to try. I'm going to wait for this bar to close. I'd like to get it up closer to like 36 and 3/4. So I'll put that in. I might have missed it, right? I mean, bonds are still bid. And Nvidia made a nice green candle. Amazon's on its high. Nvidia 196 or so. You've got all these tech names that are up huge. SanDisk up 20%. Whoa. I didn't realize it was up that much. MU up 13%. Intel up 12%. STX up 15%, AMD up 12%. So maybe I shouldn't be so worried about trying to go long, right? Bruce, that's a great question. I think it does. And the reason I say monitoring YM and RTY can help is because what I'm looking for on days when I want to trade heavier are days when it's easier for me to get into the flow and see the price action better. So it helps to have a couple other markets that are showing me. And ideally, what I like to see is risk off or risk on days across the board. This stuff where we've just had these huge rotational flows constantly over the last several months has made it really hard, I think, because there's just, Chris and I have talked about it a lot. There's so much cash on the sidelines that it doesn't seem like we've had really big buying days or selling days. We just are constantly getting these rotations. Like, look at the heat map right here on the S&P right now. There's a lot of red here, right? And then you have these green names. It's kind of ridiculous, right? Like, not ridiculous. It makes it trickier. So for me, I guess I like to think of my own personal edge as the concept that I've been looking at charts for 15 years or whatever it's been. And that's what I like to do, is formulate sort of these concepts or theories in my trading. Like, well, why why can this other stuff not rally that much? You know, when everything is super concentrated into these top names and everyone talks about how dangerous that is, and then the market starts to broaden out and it's like, oh, this should be great, the market's broadening out. Well, then you get price action where the spread exists, right? Because NQ came down so much and these other markets are holding up here, you know, that's why I was saying, like, it could just be that we start getting the spread coming in here, and you know, the other markets don't necessarily have to sell off that much. They could just sort of hang around and have NQ come up and it balances a little better. But if the if NQ is really the leader and now these other markets start to sell off some, then I think, you know, to answer your question, yeah, it's worth watching them, because if we can't even reclaim the RTH open here in the YM and the RTY, and if you're watching them and they just start to sweep to the downside, the market could take notice of that, right? So I like to be watching these different things all together. Like the advanced declines just made a new low and have now gone negative on the day. So now we're minus 150 on the advanced declines. We've got RTY just made a new low in the regular trading session. And, you know, again, getting back to kind of some of my theory here, what if we come back in a week or two, will rates be a lot higher or will they be a lot lower? Again, is the market showing some signs of fear that the Fed isn't telling us something? What are they seeing that we're not seeing? And they don't want to tell us. And Warsh was, I mean, he was horrible in that press conference, if you ask me, compared to Powell. I mean, you know, if you're going to have all this Fed speak and you're going to do a presser and you're going to, then just tell us what the hell you're thinking. And all these subcommittees and everything that they're trying to do, it was a joke, I thought. And the joke could be on all of us, is that if we're really at an edge here of what do we do one way versus the other. Sorry, I need to flash back to this because I got filled at 36 3/4. I didn't put more than one on, so that was sort of silly. But what I want to see now is price come back down to the open and flush through. I mean, it may still be a great buying opportunity to see if I can get it back at, say, 06 3/4 on a retest of this bigger moving average. So I'd like to see the 1 minute chart close below 24 3/4 and then ultimately move my stop to, like, you know, 30 3/4 or somewhere thereabouts. But it could be silly not to just take this profit. So for now, I don't really want to see it come back up into this range. Let's flash back over to, yeah, for now, I'll just move it to kind of break even right there. The NQ looks like it's trying to hold pretty well, but you can see where the stops are, right? So all the algos have to do is decide to run some downside stops, and it makes this a little tricky for people that were buying this thing, right? Now we've got crude oil coming back up, looking like it wants to it's eyeing and looking like it wants to get back up to its opening price. I think below the 25s, you know, I could probably add to this. But we do have Nvidia's pretty close to its highs, so it actually just might just stop me out here. So that was sort of, I don't know, was that stupid? I could have taken a profit right there, but sometimes it's so quick you can't really do it, right? I think personally, now here's your controlling bar. If this fails again at, what did I say that moving average was? 31.25. So if that fails again right there, I'm gonna try it short again with some size. Looks like it's gonna hold, but so here's what I'm kind of looking at. These should be buyer control point here, where it shouldn't come back and violate this level, in my opinion. So, you know, what happened was a lot of people got long right there, right? So where are their stops going to be? They're probably going to be here. They're going to be below these levels. And then the big one is the stops are going to be below the open and below this RTH low. Where does that come in? 7,400. And yeah, to answer your question, like it, if I'm formulating some theory here, and what I'm trying to do is say, like, let's pan back out. These are my trading view charts. NQ can sometimes be pretty precise, and you saw that even yesterday. All right, I'm trying it short again. It can reject the highs at a precise spot and can sweep pretty hard. So will it do that again? These short covering rallies can be brutal, but if and when they reverse, then they can also reverse just as hard. But see what happened there? I got short and it instantly sort of went against me. So that's a little bit of a sign that, like, oh, that was not a good place, right? Like the algos basically took our stops and immediately tried to tick it through to the upside. And it looks like they might do that, right? So I don't know how much I like this. I want to see a failure here instead of NQ going straight up through, which NQ looks pretty poised to just keep running the upside stops, but that's what happens when they catch people too, is you get buyers coming in right on the high, and then that's right at the wrong time, and then they take it the other way. And it doesn't mean necessarily that we won't go back out to new highs in today's session, but if they fail it, then those buyers, those late buyers, panic pretty quickly, and or they have sell stops down below, and so they can sweep it. But look, it couldn't really move. It couldn't really move great in my favor right there. So I don't know how much I like this, But if we see NVIDIA start to sell off here and fade this 197 level, we'll see, right? $36.75 was this level before that I tried, and it worked for a moment, but now I'm looking a little weary. But I think I'm going to try a few more up here. Yeah, exactly. Well, see if NVIDIA can follow through or not. That's the big one I'm watching. I think I'll have to take some off. Let's flip over here to the, now you're getting RTY and YM confirming. So this could get pretty gnarly for me if I don't get out. Take one off here. Take another one off if it can get back down into this range. And then if it does actually fail, I'll be in a good spot, I think. Yeah, come on. All right, now I've got 4 left. So at least I can trade around this a little if I want to. They should hold this level, but what if they don't? Don't be a hero, Bozier. All right, well, if they decide to reject it and sweep it some, I'll be fine, but that's really strong bullish action, isn't it? So I already gave back. I made a trade last night where I made a little money. That's why I already had some green on that. But so this is kind of annoying. If it comes back down, I want to maybe add to this again. You're seeing a little sag now in the bond market. So if the bonds start to reverse, you know, that's something to watch for, that they could just start selling them again. $8.30. I don't need to add to that. I think that's probably a mistake. I'd rather see it confirm more. Apple is on its low. That's just rotational probably, right? YM rejected its open again. The algos should want to retest this and probably retest the open, I would think. But this could be my chance to get out too, so I want to be real careful here. Just take one Doge. NVIDIA new highs, it looks like. See if we can get some down ticks. Doesn't feel like it. Minus 130, and it doesn't even want to. There's some potential. Let's see. To see if NVIDIA will actually reject this 197 level. I'm going to probably just take one off here, just for prudence sake. Yeah. Took one off. I've got 3 left. Probably means they'll now sweep it, but maybe not. So I just it's holding up really well. So this is me showing you what not to do, right? We're getting a rejection now in NVIDIA. Question is, will the market notice and will they care? I'm going to try putting a couple more onto this if it goes my way. Need the NQ to sweep down through these levels, and the turtle soup traders, this was that previous high, so that the stops should be down below those levels. Come on, baby. Just too much strength maybe, though. So ultimately I need it to sweep and return to some kind of downsloping moving average instead. The moving average is sloping up, so I kind of teetering on the brink here. See if we can get some actual downticks. I don't know. We can. Guess it might be better not to add to this. Just make sure I can get, if I can get one back, then maybe I'll be more glad to add to it. And now we've got some potential. Still probably should take it off right here, but this could be the reversal I was looking for, you know? Okay, I got one back. Now do I want, let's take a look at this again. So remember 31.25 was my 5-day moving average level. And if we start flushing this, you know, we just drew in a lot of buyers. We're getting some downticks now. We got to minus 500 there. So the theory is that we should come back to the open. And the question is, can we get there? We need to break this support. These 25s they should be pretty good support there at the 25s. With NQ, we're kind of teetering because the support should really come in at precisely at this previous high. So when it starts to break through that, then sometimes what happens is if it targets the middle of the range, then oftentimes it targets the bottom of the range. And then like it did with ES right there, if it holds the bottom of that range, then that's good, because it could just be making this big, you know, ready move to go back up to the upside. But now if it breaks the bottom of that range, you know, it can open the door a little bit. So I'm watching to see if crude keeps going up to and through its open. I'm watching to see if the bond market starts rolling over and selling off. I'm watching NVIDIA, how it just rejected 197 and is now trading back to 195. So for things to really get going, you want to see NVIDIA, you know, back down below its open, right? Now, I don't know if we can do that today, but we can. We just, will we, right? So I might try and just, I'd like to hold this in case they flush it. 34.5 is the high of that bar. I think I need to just at least take one, make sure that I'm taking one off in case it reverses again. So I'm going to protect 8 points here. Well, 31.75. I'm going to just take one off here. 27 3/4, if I can get it. All right. Now I'm just going to manage this runner. Okay, I don't want this to go back up into this range, but I'd like to let the trade develop a little bit. So I want to see this 1 minute bar close red and down in here, and then I can use the high of that 1 minute bar, or maybe just a little bit more up into the range. 31, the high of this bar is 31 3/4, and that protects 8 points. So I'm just going to do that for now, and we'll see how bad this can get. I don't know if I might cancel my order here because they can take this down really hard. So I might just, I'm canceling my bid, and I'm going to just see what happens, right? Look at YM is now testing this big level of support in the overnight, which has held a couple times, but if it goes through its R2H lows, you've got the advanced declines now making a new low at -160. But what if we have this, big short squeeze that fails, and then advanced declines go back crazy to the downside? We end up with a day where they're down, -2,000 or something, and everything closes on its lows again. If that happens, you have to stop acting like we're in a bull market, right? Like, this is the inflection point. In my opinion, it's a really good spot. There's a lot of people that probably made a ton of money going long yesterday on the close. And good for you. Like, that kind of capitulation is absolutely what works a lot in markets, right? And those of you that are good at that, absolutely hats off to you. I have a really hard time with it. Again, partly because I started trading in basically the fall of 2007. So my very first forays in trading were completely through one of the worst bear markets we've ever had in 2008. So I kind of always have this like questioning element to the markets of like, hey, shouldn't we see a stronger correction? Shouldn't we, or have we gone too far too fast? Or has this just gone on for way too many years to not have a cycle that becomes a little longer term? Maybe not. The super boom stuff is pretty incredible to think about how it can really change everything. But kind of have to go back to some of the demographical types of studies and theories about sort of what am I getting at? Like education and sort of developed countries versus developing countries, and the idea that, when a developed country gets so far along that everybody's basically educated and there's no longer like a lot of people growing up and learning the trades and learning sort of the labor side of things because everyone has a college education, so they're all getting these sort of better jobs. Well, and then you have something really big and disruptive come along like AI. And, again, I'm not saying this isn't the start of some super boom kind of thing, but simultaneously, we all have been asking those questions of like, do these do these kinds of technological advances actually lead to, you know, greater efficiencies and therefore uh, a a decline in employment opportunity and that sort of thing. If everything becomes robotic, then what do we all do? And I guess that's why I'm trying to, trade and trade consistently as a living, because if you can master this skill, you may not ever be a master of it. You always have to worry about, like I said, where are you going to get triggered by something that causes you to make a mistake and then turn that mistake into a worse mistake. You have to really be watching for that all the time. But if, on the other hand, if you can figure this out and be a skillful trader, that's selective and doesn't overtrade and doesn't revenge trade and all that, then you've got a good way of making a living for, as long as there's enough movement in the market. If there isn't, then the challenge is to search for the markets that might be giving you the opportunities, a better opportunity. All right, well, let's see if we can sweep through these levels. The RTY made a new low, and the RTH. YM looks like it's eyeing the RTH low. This could be the spot to just be getting long and loading up again. But we do have the 2s, 10s, and 30s also starting to print negative. In fact, in the RTH session, the 10s and 30s are basically on their lows. NVIDIA back to 194. We've got new lows in the advanced declines, minus 190 right now. And, the algos know and can see that there's sell stops down below here. So if they can get it low enough, they trigger them, and they know they can just keep doing that kind of shit. It's so frustrating, I'm telling you. The crookery these days is sort of out of hand, right? So my entry was 39 3/4. And what I want to try and do is, typically I try to capture 30 points on my runner as kind of the next level. But what if this keeps breaking? What if this keeps going, right? So I want to be asking myself that question. So the next thing I want to see is a print of the 1 minute bar down through the 09 3/4 level, actually down through the 04 3/4 level. And then I'm going to just try to find a spot to put my stop to protect about 30 points, right? That's a pretty good flush right there. We got to minus 670 down ticks, and the YM hasn't quite, YM is still holding up in there. But will it actually hold? Because if the YM starts to go and or not the YM, the NQ, if the NQ starts to go and targets its open and its overnight low, maybe not the overnight low, but even the RTH low, then look, you can have this thing set up really nicely. So I'd really like to see if I can wait this one out, but that could have been the best spot to get out. But they can do this sometimes where they come down through the open, then they can give you a little retest of the open, and then they can continue lower as well. I mean, the thing that would be like the really extreme ugliness scenario for the Fed would be to come back in today and have the bond market absolutely tank again so that yields go a lot higher. But maybe Warsh would be saying that's a victory because he doesn't have to do anything. Well, if you don't have to do anything and you're just going to let the market do everything for you, then what are we doing here? Why are you guys here? Maybe you should be going and doing something else, and we can let the markets price this stuff the way they want to. You know, whatever the supply and demand dictates there. See, there's a 150 bid lot here at 13. I want to try shorting another one on this. If we get a retest here of this moving average. $19.75, I'm offering one. All right. Missed it. It could be another good spot, but what I want to see for the price action is for that quick one-touch rejection and then have it really freaking accelerate to the downside. So sometimes when I'm making my judgments on things, all I'm doing is trying to gauge, is the market behaving the way I think it should behave and expect it to behave, right? So if we've gone into a nice downtrending action here, and if this follows through, that's exactly the kind of thing that you want to see. Is it gives you a one touch and then boom, it's just straight down into sell mode. And so I want to see this bar close red below here, and then ideally I don't want it to come back up into this now little range, right? So I would try to move my stop somewhere in there, you know, because this now was support in theory. Now it should become resistance, and if they follow through, and especially if you start to see NQ join in the fun here, you know. So let's flip back over for a second. NVIDIA really needs to hold this, the low of this 15-minute candle here at 194.5 or whatever that is. The low is 194.24. Here's another print. So I want to see it go lower, and then I can put my stop above this little candle right here. And I might just do that anyway, but I don't know. I could easily just get stopped out and shaken out. This could be really good support here. So I don't want to be overly stupid about it. I don't want to give back a whole bunch of profit. This is one of the things I have the hardest time with is giving trades room, but then respecting levels and stops and things. Like I should have just taken that off probably right there, right? And now if it goes down through those lows, it could get gnarly, but the level that should have held so far has held. So it's like, I don't want to be too stupid about it. Now the open should be the thing that it rejects, but the fact that the NQ is well above its open, that's the hard part. No, I should have gotten out, I guess. Yeah, I mean, what you have to remember, Stuart, as well, is the VWAP changes, right? I mean, it can. You can anchor a VWAP anywhere you want. So I know they have these VWAPs on here. You're right, 14, right? Is that where the VWAP is for you? That's where I've got it. Okay, 74.05. Okay. I mean, this could still face rip me to the upside, so I'm just going to put my stop above this candle. Fuck it. That's the only way to relax about trading, right? Is to put your stop in and let it go. See if you're right. If you're wrong, you're wrong. There goes crude through its open. We've got new lows in the bonds, at least in the RTH session. So watch and see. Advanced declines are making a new low as well. Because again, you saw how the selling came in yesterday. When they have these little flags that then reject and go offered again. I like to say it a lot, is like, support is only support if the buyers actually show up, right? If the sellers show up and they rip and they knife it right through, then what should have been support becomes resistance. And it just all has to do with the anxiety of buyers and sellers, right? So this could have just been a massive short squeeze where everyone was gifted this opportunity to get out of the market again up here. You know, you could be looking back a week from now and being like, wow, what an incredible short opportunity that was. And how did I not take it? So I'm looking for a close below 04 3/4. So that's kind of a good, interesting thing, since Stuart, you've got that VWAP at 05. So that would be a nice confirmation for me as well, right? That if we break that, let's flip back over to these other charts. Look at YM now. Made a new RTH low. You know, bonds, the 30-year on its low for the RTH. Same with the 10s and the 2s now. Crude confirming, above its open. So now the door here for crude, they could start squeezing the shorts in crude quite a lot here as well. So, but you're right, it could be, we could make a nice little double bottom here with how strong the tech names are. And if we do, we do. And I get stopped out and I missed my chance to get another $500 out of that trade. So usually I'm kind of stubborn about that shit. There's my exit. So I'm flat again. All right, I'm up $2,200 on the day, so that's good. It gives me some breathing room too, right, to try to take whatever next signal I might have. I mean, if all they were doing was testing this bigger moving average and they're going to continue this move to the upside, then what you want to be formulating here, especially with NQ, since it's the strongest, is, again, here's the ATR box based off the low of the day and the overnight. But what if the market ignores all this? And we've seen these big rallies before, so this could easily happen. If I move this box up, and consider the low of the day, the RTH low and the NQ, look at that. We could go all the way back up to 580, 28,580 or so. And let's guess where we have some numbers, right? R2, 28,523. Weekly pivot, 28,628. Monthly S1, a little higher. And then, of course, trying to regain the 13-day moving average, which it's sloping down. So the projected 13-day for tomorrow is 28,598. So those are your kind of bullish scenarios, right? These moving averages, they're lagging indicators. So, they work a lot. And then when they fail, sometimes they can fail, that's just the way trading goes. This is a beautiful one here in the overnight. Look at how, we had our initial thrust, came back into that support, right? So here were those highs. It perfectly tested that support. But once it gave you the indication that it was going back up through this little downtrend, look at how it comes back and perfectly tests this moving average right here. This one and then this one. That's obviously the one that's super good for the long trade. I mean, you just made 700 points possibly in the NQ. But we're still getting weak action here across the board on YM, RTY, Yes, look at that. I can't believe that. Now they're going to go right back down to where I thought they'd go. So I'm ready. I'm locked and loaded to stay leaning on the short side, especially because now if we get confirmation below the open and it's continuation pattern, you know, see if I can get one back now to this support, 5.25. All right, now I'm going to add to it if it goes my way. Could be stupid. I guess I'll just leave it as 2. See if I can get a quick little move through some stops, and then NQs could hold easily. But NVIDIA did test and break the low of that candle, so maybe there's some room here still. I don't know. Probably a bit of a chase right there, but maybe I'll get a better opportunity. All right, well, got one off. So now I'm back to having basically my runner for my earlier trade. I kind of tightened my stop a lot, but now that we've broken the 7,400, it's like, can we actually follow through and sweep? And it just is going to depend on NQ, really. But look at YM. It looks ugly again. All right, I'm flat again, but I'm still looking to get short. A retest of the open here would be nice, because now you have the broader moving average here, this big 15-minute. It's failed down through it, and then oftentimes a recheck to it is a good entry, because then you want it to fail again and you want to see it roll over, right? This is a pretty good re-entry point too if you want, but you have to figure out, okay, where do I want my stop? Because now ultimately your stop should be up above 22. And so if you want, you know, a 15-point stop, that's on you, right? I don't typically want to trade with a 15-point stop, but sometimes that's what you have to do in order to get involved and in order to give yourself a chance. I don't know. I'm always kind of going back and forth about, like I said, if my stops are too tight or not or whatever. Usually they're just too tight, and that's because I don't have a huge amount of capital that I'm trading with. This is my personal account. I've got, 15 grand in there or whatever it is. Sometimes I build it up and then I draw off of it. Other times I'm forced to draw off of it because I need the money for bills and stuff. And then I'm back to trading like a tiny account with very little wiggle room. And that's a really difficult, it's a really difficult way to trade. How do you, So ideally, I wish I had a real live account with 100 grand. I've got, like a family thing that I can trade sometimes. That's when I do some of the big position trades are in family account, but it's not really a day trading account. It's more like just a estate trust thing where I can like put a position on and trade it every once in a while. But if I get out of hand with it, my family would kill me, right? So I don't really, only when I have a really great feeling about something, some of my spreads and stuff, do I do that. Otherwise, I'm just day trading. I don't take positions home typically. Sometimes what I'll do is just close it out at the end of the Globex session and then just look to reestablish it again quickly in the overnight if I'm really feel strongly about something. Like last night, I kind of felt like, I don't know about this. It could go either way in the morning. I still feel that way with this whole Fed thing, because the market could just be saying, hey, great, we've got now until September to not have to worry about them hiking. And so, maybe that does take enough uncertainty out of it. But again, I'm kind of just curious, like what else is happening? Like if someone like Jeffrey Gundlach is, so hopefully I'm saying his name right, but if he's worried about some private credit or what else is under the surface here, we've talked about it before some, is that the second and third domino don't necessarily trigger anything, but you could get, when you start getting a fourth, fifth, sixth, seventh domino, sometimes that's the trigger that really can overwhelm and change the scenario. So look, we could have a nice little entry here with a tight stop. Because look at NVIDIA's now 193 handle. But they may not care so much about NVIDIA as they do all these other ones that are up so much today. I think I'm willing to try putting one more on up in here. Look, 1,000 offered at 13. They took it. So that can mean a couple different things, right? There was someone willing to sell 1,000 right there quickly, but there was also someone willing to buy it, right? They took it right up through. So this could be wrong to be trying to still be short up here, but I do think that we have a chance for the NQ still to at least test its open. Now look, there's 500 lot. So do you think that guy's a short? He got short at 13. He's buying half back at 10. Let's see if they are going to use it to sell. Or do they front run him and start squeezing him above? He could be the buyer that takes this back up through, because if all of a sudden it goes bid on him, he can hit the buy button and cover his 1,000 lot and sweep the book, right? There, they took out the 500 lot. I could not get filled at my 14 3/4. That's crazy, isn't it? I missed it by 1 tick. But I don't, I don't want to be stupid about this one because it did go against me, right? So I want to see it trade down through on the NQ, and I don't know if it will. If it does, now we've got stops below this. I think NVIDIA is acting like it just wants to go straight back down, in my opinion. But so maybe I will try adding to this if it breaks. We did have some bit buying coming in bonds, so there's a little bit more stability than maybe I'm thinking here. Let's flip it back over to here again. Yeah, YM and RTY went a little bit bid. All right, I added one. So this 1 minute chart is still sloping, down trending, down sloping moving average. So if this bar sweeps again, you could be looking back at this and saying, oh, wow, that was a great opportunity there to get in on the short side. I don't know. I'm going to leave it as a 2 lot and see if I get lucky. Let's try 95 3/4 on one. It could easily hold. You're seeing NVIDIA just stay offered. And here's that moving average and the NQ like I was talking about. So I'm not going to be, I really want to give this a chance to go, but now you're having some selling in the oil market and some buying in the bond market again. I think it's going to reject me and go the other way. So I'm going to get out. At least just cover one, just to be somewhat prudent. Then I'll just cancel this bid, because if they do take it lower, I don't know. I think it's getting a little too jittery for me here, so. sometimes I do this, I get scared, and then I put my stop break even, and then they stop me out, and then they go my direction. So I'm trying to get lucky on this, treat it like my runner from my first position. I want it to break 7,400 again and then not recover that, right? So I want to see where this bar closes. On the 1 minute chart, sometimes when you get a little doji like this, they can do a little double rejection. Like, I like to think of those dojis as a continuation pattern. So see if it takes out the low of this little doji or not. And if it does, it can accelerate. And then probably for me, this is it, guys. Like, if this thing doesn't just sort of collapse and follow through again, I'm going to probably call it and turn off the presentation and the screen and everything and just call it a day. I've made some money. And but this is what I mean, this little doji right here, it's sort of got the upside stops and now it's gone lower. And if it follows through and breaks this level, it can go really hard. So I really want my stop above this candle, which is 4 3/4. I'm putting it right at the candle high, partly because if this is truly a downtrend, then we should see a lower low and a lower high, right? So just a really basic principle on that. Yes, I can easily get stopped out. But I don't know. I mean, sometimes you just have to put your orders in, and then you're really at the whim of just getting lucky in terms of what kind of market orders might come in and sweep at any time. You see on the 15-minute chart, you've got this big, I think they call it a dragonfly doji when it closes down near the low like that. Sometimes these are great continuation patterns, but sometimes they can be awesome reversal patterns as well. So if it goes back up, reclaims the high, and reclaims the open, that's a very explosive, typically can be a very explosive type of pattern. Did I get stopped out? Yeah, I did. So I'm flat. All my orders are out of the system. I'm up 2,500 bucks. This feels like it's in a real choppy zone right here at this point, and unless things really sort of start to confirm better, it's just, I think it's a little bit hard to fade this tech strength when you see some of these that are up 15%, 20% on the day. So for now, I'm going to go ahead and call it in terms of the presentations. If anyone has any questions, let me know. Comments, considerations. Always glad to help. Obviously everyone's trading style is different. So it's a very, it's all just totally subjective. And again, sometimes you got to get lucky. You got to be on the side of where the liquidity decides to take it. It's not easy. But yeah, thank you as well, Stuart, and others. And I'll post my links like I normally do, like a link for my room if you want to check it out, my personal website, and all that. And we'll see what the rest of the day and tomorrow brings. But I'm probably just going to shut it down and go help my friend on his remodel of his house. So, because he's kind of in a tight mode where he really needs to get stuff done. But man, I mean, looking at the NQ, this could set up as, I mean, this could be a really good continuation pattern to the upside. So don't let me get your thoughts too terribly backwards here. If if you believe in the bull case, then you can let the shorts get squeezed. All right, everyone. Well, have a great afternoon. We'll talk to you later. Cheers.